Well, hello and welcome to the special episode on capturing the essence of ESG in Indian markets, sponsored by Refinitiv and powered by Moneycontrol. Well, my name is Kshitij Anand, and today we'll be looking at nuances of ESG investing in India. Well, welcome to our special webinar on Headwinds and Tailwinds, navigating Indian financial markets on ESG investing. Well, the COVID-19 pandemic has indeed amplified the demand for ESG, that is environmental, social, and governance investing across the globe. Now, a report said that ESG assets have grown at about 22% per annum since their inception in 2006. Now, ESG assets under management are likely to hit 50 trillion mark by 2025 globally, and that is a big leap, I must say that. However, for India, the size of the industry is relatively small, but is definitely fast catching up. Now, there are more than 10,000 funds globally that are focused on ESG theme, compared to just about 22 here in India. Now, amid the COVID-19 pandemic, even the younger generation of investors are becoming more vocal and interested in investing in companies that are more responsible. Now, they are adding ESG funds and banking upon the niche segment by identifying companies that are taking responsibility of the environment and society. Now, in this backdrop, it is important to conduct thorough research, leverage data-backed insights, and use the technology to make an informed decision. Now, in this exclusive webinar, our experts will explore the market size of ESG funds in India, how can one invest in them, and how best-in-class data and analytics can drive performance, growth, and innovation for customers as well as for partners. Well, to take the webinar forward, I have with me Abhay Lejwala, who is MD and Fund Manager at Avendus Capital. We have Harsha Upadhyay, who is a Chief Investment Officer, Equity President at Kotak Mahindra Asset Management Company.
Hello.
Akanksha Sharma, who is a Global Head ESG at Sterlite. And Deepak Khurana, who is a Proposition Sales Director, Sustainable Finance and Deter Asia Pacific at Refinitiv. Well, thank you so much for your time, everyone.
Thank you.
Hello, Kshitij. Thanks for having us.
Right, Abhay, let me start with you. Now, Mr. Lejwala, Avendus India ESG Fund is India's first ESG fund. Now, so help our viewers decode or break down the ESG concept in layman terms.
Sure. I think what I want to say to everyone is, first of all, ESG is a style of investment. ESG is not some very esoteric way of justifying values, not just for values-based investors, but it is a style of investing. And the ultimate objective of this style of investing, as is true for any style of investing, is the generation of alpha. And let me tell you what really, this has been the result of. The result of the ESG style of investing actually comes from how the definition of a company or a corporation has changed. So earlier, up until the last 2 years, 3 years, 4 years, 5 years, we always thought that the primary objective of a company is to generate shareholder value. And that shareholder value primarily comes from profits. Now, over the last few years, there has been a dramatic transformation in how the role of a corporation is defined. It's no longer just about a corporation making profits that will generate shareholder value. It is now all about a corporation and how that corporation interacts with all stakeholders. And the stakeholders include, apart from the shareholders, the regulator, the employees, the society in which that corporate works. So when you take this complete metamorphosis in the way an organization is defined, the ESG style of investing is perhaps the best way in which you will be able to capture these non-financial factors which go into analyzing a corporation's relationship with stakeholders other than shareholders. We have to move beyond profits. So in conclusion, I want to say that ESG is a source of alpha generation, and given the change in the role of the organization and the manifestation or the occurrence of non-financial risks happening at a far faster pace than we've ever seen, ESG is the right way or the right style of investing given those considerations.
Right. Well, Harsha, let me come to you as well. Now, Kotak has its own ESG opportunities fund. What is your response that you got from investors when you first launched it? Are Indian investors, warming up to the idea of ESG funds?
Definitely, when you look at the overall investment landscape, ESG investing is at a very nascent stage when it comes to India. Nevertheless, I think the awareness is going up over the last a few years, and sometime during the end of 2020, we launched our ESG-oriented fund. The response was really good. We collected almost about 2,000 crores in that particular NFO. And for the last 7-8 months, we have been deploying that money into the market based on ESG investing. And in the same time, we have also seen many more fund houses launch products on ESG investing. So overall, AUM now in the mutual fund industry, which is looking at ESG initiatives as a theme, is about 12,000 crores. So definitely early stages, but interest is building up, if you ask me.
Right. I think that is where we have to capitalize on. It is in the nascent stage, and people are or investors are warming up to the idea. Now, Akanksha, let me come to you. Now, ESG, well, they're not all equals and cannot be measured in similar ways. Now, social, for example, involves a lot of qualitative improvements over time. So, as a corporate, how would you foresee challenges investors may face when quantifying achievements against these, and are there better ways of measuring or implementation models?
Well, for ESG, I think 2020 has been remarkably bullish, and this tells us that investors are extremely conscious and are evaluating businesses based on their ESG credentials and ratings. And the trends are increasingly, very, very progressive. So I think the answer to this is a sort of multilateral and inclusive effort that can bring in a healthy collaboration of the public, private, and social sector into the mix, that can orchestrate such actions at a global level, building a unified sort of ESG reporting standards. Particularly talking about the social sector, I think the social impact programs also call for very high quantification of outcomes and impact, and it is extremely important. And that's where I believe moving to more data-centric implementation models, wherein real-time data and predefined KPIs and target setting is important to measure the change. I think newer financial models like impact investing and also ESG bonds, like social bonds to some extent, also makes this possible against the traditional models of pure philanthropy or grant making. And this is where I think the transformation is leading up to.
No, absolutely, and important point highlighted there by Akanksha there. But let me come to Deepak. Now, Deepak, there are a lot of big numbers floating about the size of ESG industry globally. So, what does the data suggest about the size of the ESG industry globally? And post the pandemic, has the fund size grown? Because, I've seen, a lot of media reports on that. And as, our Akanksha also highlighted that, 2020 has been a fabulous year for ESG investing. So what is the size of ESG segment here in India vis-a-vis globally?
Thanks for having me on your panel, Kshitij, and pleasure to be sharing this forum with you, Abhay, Harsha, and Akanksha. Kshitij, the initial reaction to your question is the ESG practice has now moved up as a mainstream activity in the financial services industry. We have sizable numbers that are driven by ESG considerations. we can look at the numbers through various lenses. And one common lens is the assets under management of UNPRI signatories. And for the benefit of our viewers, the full form of UNPRI is United Nations Principle of Responsible Investment. So under UNPRI framework, asset managers and asset owners uniformly apply ESG considerations in their investment decision-making process. And this is not limited to a single fund or a ESG labeled investment strategy, rather applicable to the entire investment management function of an asset owner or asset management firm. Collectively, AUM, the collective AUM represented by the PRI signatories stood at USD 100, almost 100 trillion as on 31st March of 2020. And there are around 3,000 signatories globally. Common names from India are SBI Funds Management, Axis Asset Management, Nippon. Harsha is there on the panel. His firm Kotak Asset Management. They are also PRI signatory, but that's more of the offshore entity as of now. So altogether, we have around 12 firms signing this pact from India. The second common lens to assess the magnitude of ESG investments is the size of ESG labeled funds. And as you mentioned earlier, we see close to around 10,000 odd funds, ESG labeled funds worldwide, and 22 of them are here in India. And as per our database, these funds collectively manage around 4.5 trillion USD AUM. Another interesting lens to get some sense of the size of ESG industry is the recent regulatory disclosures in Europe. Europe recently launched a new disclosure framework called SFDR, the Sustainable Finance Disclosure Regulation. So this imposed mandatory ESG disclosures for asset managers and other financial markets in Europe. And as per the initial disclosures, the Article 8 and Article 9 funds, which are sustainable funds, they all together manage around Euro 3 trillion assets. And this number is expected to go further up with incremental disclosures and also inclusion of more funds in this category. Now, on the pandemic piece, the COVID surely improved flows to sustainable funds or ESG funds. We've seen superlative flows over last 5 quarters since Q2 of last year. On an average, we're seeing an inflow of around 160 billion every quarter. This has been strongest since 2006, the data that I saw. And India too has seen some strong inflows from ESG funds, 5 times growth over last 2 years. And Harsha also touched upon this overall AUM. So the overall AUM is for India is close to now USD 2 billion, and this includes only mutual funds and the funds offered by insurance funds. This does not include the funds offered by the firm, which is Abhay's firm, Vendors. That is more of a AIF, and we have limited disclosure. There are there are different ways of disclosing the AUM around AIF and the private funds. And another interesting point, the total AUM of India dedicated offshore ESG funds, that's also quite sizable. Offshore funds are the funds that are managed outside India but investing in India. And the AUM of that category is close to around 6 billion. So in summary, in comparison with global funds, India is still at the initial stage of promoting ESG funds here in the country. But yes, it's growing pretty fast. And just one last point that the overall estimates looks very promising. There are multiple studies that are available. You also, I think, quickly touched upon this point. By 2025, this So USD, we are expected to touch USD 50 trillion as the assets. And by 2030, I'll give you another number. Estimates are being made to 2030, we're expecting the number to touch around 100 trillion. So it's pretty, large numbers that we're talking about. And Abhay, I think, commonly mentioned that going forward, everything is going to be sustainable investing. There's not going to be any simple investing. Everything is going to be ESG based and the sustainability based investing going forward.
No, absolutely interesting numbers there, Deepak, and you were talking about disclosures, and let me quickly go to Abhay on the same, because he's the right guy for the to compare the both international and domestic standards. So, is there any global parameters on which companies are evaluated, Abhay, and are you following those parameters for your fund, and or what are your parameters that you're following?
So
So, given that ESG is still evolving all over the world, there is no evaluation, or there is no standardization, or there are no benchmarks at this point in time.
Right.
So it is pretty much left to the investment management firms as to how they are going around with their entire sustainability process. As far as the corporates are concerned, of course, there are benchmarks. We have the Sustainable Accounting Standards Board. They have benchmarks for different sectors. But as far as the asset managers are concerned, there is nothing. And in fact, this is leading to a lot of confusion because different ESG rankers, such as the rating agencies, all follow different methodologies, different philosophies. And you might have a situation where a certain company is ranked high by one rating provider and another company ranked low. So clearly, as the world of ESG evolves, we think that there is currently a lot of work going on bringing benchmarks. And I think Europe has been leading the way. Europe has led the way in terms of regulation. We have a taxonomy there. We have the SFDR, which we mentioned. And I think the next thing that Europe, and I hear what the US is also working on, is coming out with some sort of benchmarks for what constitutes ESG. So to conclude, I will say that in the absence of these benchmarks, I think the individual asset management firms will need to really focus on the materiality aspect of of ESG, because ESG is very, very vast. And you can't be looking at 350 and 400 variables. You have to look for different sectors, look at what is materially relevant to that sector. So to that extent, it's a reasonably arbitrary process at this point in time. But we are very encouraged by the fact that disclosure levels by SEBI, have risen. The BRSR is an excellent initiative, which will probably help us, build some benchmarks as the data comes out on as many as 1,000 companies over the next few years. So it's evolving, and I think it's a matter of time before there is a lot of benchmarks on disclosures coming through primarily from Europe and from the SEC in the US. I think everything will be in place, my view, within the next 2 years or even faster.
Okay, I think that's good. That's definitely good news for the industry as well, and for investors as well, who can have a clear grasp of looking at things. Now, we briefly touched upon the corporates, following those standards. In fact, I've also read, a report that most of the Nifty 50 companies are also reporting the ESG, parameters, or they're reporting based on the ESG format. So, have we covered? So, what are the kind of regulatory procedures companies have to follow to become an ESG compliant company?
Sorry, is that to me?
Yes, yes, yes. In continuation of the question that you've asked.
No, right now there is no regulatory stuff, because each one is using the disclosures that are coming out of the companies. Before the BRSR, we had the BRRs, which gave us a lot of the ESG information. Now, a lot of the ESG information under BRR was not complete, in the sense that we would need far more disclosures, and with BRSR that is now going to be possible. But it's not just the BRSR. Finally, it depends on how the individual asset manager is going through the information that the company has disclosed. And even before the BRSR, we were looking at a lot of variables. And there is enough to be able to give us or allow us to do a very accurate assessment. Of course, with BRSR, it will be that much easier. But as I said, there is all we need from the regulator, or more than the regulator, what we actually want to see from the companies is a voluntary assessment of their own ESG parameters, how a company is going around with ESG, what it is doing. So we have sustainability reports today, but I'll be very honest. The sustainability reports do not help at all. We need far more meat. We need far more material, and we actually need a company to give out what is their ESG DNA. So I think we'll really wait for that kind of information to come out. Companies will have to give their ESG DNA and not just say, what they are doing. Why are they doing what they are doing?
Right. Important point highlighted there by Abhay, and I'm sure our viewers would take note of that. Now, Harsha, let me come to you, and this is definitely the question is interest a lot of viewers who will be watching this webinar. So, what do investors look for when they try to identify businesses they believe will deliver on the ESG target or promises?
Kshitij, let me begin with a clarification. Deepak mentioned about Kotak offshore being in UNPRI. Asset Management India is also a signatory for the UNPRI standards. And in fact, we were the first asset management company from India to be part of UNPRI. As far as investing landscape is concerned, I think if you look at the global ESG landscape, it is very evolved. There are various subcategories of ESG investing. While in India, we club all the investments as ESG investing. But when you look at it from a global perspective, there are various subcategories such as positive screening, negative screening. What do we mean by positive screening? You will screen the companies based on the ESG scores, and companies which have higher ESG score make it into the portfolio. Then negative screening is also called as exclusion, where you exclude certain industry sectors or segments of the economy which are not really helping the ESG purpose. Similarly, we also have best in class, which means that in every sector you will invest into best of the companies which are taking good strides on the ESG initiatives. You also have impact funds, which are essentially more from the private equity space. These are the investments which go and invest into businesses which make a positive impact on any of the parameters of ESG or a specific pillar like environment, etc.
Right.
When it comes to India, as I mentioned, it's still a nascent stage. So most of the investing is happening on the exclusion principle, at least in the mutual fund industry. And that's what we have been following even at Kotak Mutual Fund. There are 4 subsectors of the economy which are excluded from our investments. That is tobacco, liquor, manufacturing of controversial weapons, and gambling. Rest all of industry segments are available for investments. But what do we do in our fund is to look at not just the financial parameters, which anyways every investor would do when he or she is analyzing a portfolio construction. They will try to look at the fundamental attractiveness of a particular company and then take a decision on it. In addition to that, in ESG investing, we also look at non-financial parameters or ESG parameters in particular and see how a company is ranked based on ESG parameters. So the companies which rank very well on the ESG parameters, as well as those which are fundamentally attractive, would be the core of the portfolio when we look at our own ESG opportunities fund. We will have very small investments into some of the businesses which are taking good initiatives on the ESG. Today, they may not be at the forefront of ESG initiatives, but definitely they are taking right steps, and we believe that they will, over a period of time, reach that particular milestone. Or there could be some cyclical companies which are doing well on the ESG parameters, but today the cycle may not be in their favor. We expect the fundamental attractiveness to improve over a period of time. So even there, we would have some investments. Where we will not invest would be those which are ranked very lowly on the ESG score or the rating, and those which are also not fundamentally attractive. So essentially, we are marrying both financial parameters as well as ESG parameters to analyze companies and businesses and then make a portfolio. So that's what we are trying to do in Kotak ESG opportunities.
Right. Interesting point there. Now, Akanksha, let me come to you as well. Do you think ESG reporting, so far is being done adequately and it is beyond greenwashing?
Well, see, in the globalized world where the economies are more intertwined than ever, I think we should look at this question in two perspectives.
Sure.
Is ESG reporting merely a means for enticing investors, or is it actually a radical instrument of change that can ensure better actions on triple bottom line? So I think this is the inflection point where we need to break the myth through practice. And I think a lot of disproportion is the propensity of the executives to treat ESG practice as an operational appendage, or maybe some sort of superficial treatment, which I feel is not there in other parts of the world that everybody else is commonly saying. And in India, particularly, despite the urgent calls across the businesses to transition into more sustainable practices, I think we are still lagging behind the global norms in the environmental and governance parameters. So,
Okay.
while as a country we are signatory to the Paris Agreement and have ambitious targets, and coupled with various other declarations at a global level on UN Sustainable Development agendas, I think it needs to really percolate down at the businesses level, and where the reporting can really become a great trigger of change. And I totally agree that BRSR can be a great equalizer in quantifying the disclosures, and we are absolutely lacking such common benchmarks which could set the practice right. So I think it is definitely an evolving space, and next few years would be the game changer on ESG.
Right. So it is an evolving space. And, Deepak, let me come to you. When most companies are going green, and, the recent example being the, Reliance Industries, or RIL, who plans to invest on about 75,000 crores for capital expenditure on new energy, or solar energy, or you could say green energy. What is the kind of institutional money which could actually flow into green economy in India?
Interesting and very pertinent question, Kshitij. Climate has been acknowledged as the biggest risk within the broader spectrum of ESG issues. And we all know that India is the third largest greenhouse emitter worldwide, and one of the most exposed countries when it comes to the adverse impacts of climate change. So investing in green economy definitely going to help India to avoid multiple issues and risks. The climate change mitigation will help avoid public health issues, reduce air pollution, avoid climate disasters such as extreme heat waves. So all this is going to be definitely going to make a lot of sense for our country, for India. And to ensure alignment with the Paris Accord, India is estimated to put up a renewable energy capacity of around 900 gigawatts, the kind of estimates that are available as of now. And large section of this number is expected to come from solar. Around 750 gigawatts is expected to be the solar, and followed by the wind power, which is going to be around 100 gigawatts. In terms of high-level timelines, we are targeting a capacity of 175 gigawatts of renewable energy by 2022, and an estimated capacity of almost 500 gigawatts by 2030. So quite aspirational targets that we have for expanding our capacity. And in terms of the installed capacity so far, the renewable power capacity has increased at a very fast pace over the last 5 years. We have posted a CAGR of almost 18% over last 6 years. As of March 2021, the installed capacity was around 94 gigawatts.
Okay.
Now coming to the demand side, definitely the demand also has seen a significant increase. The estimated demand that India would require, an additional power supply of almost 450 gigawatts by 2034. And the peak demand that we saw so far was close to 183 gigawatts by financial year 20. And now translating this demand and supply estimates to the investing and the financing needs of the country. On average, renewable energy investments over the last 5 years hovered around 8 to 10 billion every year. And going forward, the country is going to need almost 20 to 30 billion every year over next 10 years to achieve the goal that we have set of almost 450 gigawatts. So as per another report, by 2028, India can see an investment worth USD 500 billion in the renewable energy as a sector. And in terms of the global recognition of the investment opportunity in India, we have this reputed institution, British Business Energy, ranked India third globally in terms of its renewable energy investments and plans for 2020, the recent numbers that we had. And in March 2021, European Union joined CDRI. This is an India-led initiative aimed to ensure long-term infrastructure development to address climate challenges. And recently, we all know that we had some visitors from US, and eventually we agreed to restructure our strategic energy partnership to concentrate on cleaner energy. So quite a bit of cooperation is happening on that side as well. So in summary, India needs sizable investment to support the growing need of renewable energy in the country. And who's going to enable this investment? It's going to be through local and offshore ESG funds, and they would play definitely a critical role in enabling this funding. And a combined funding from the public and the private sources would be required to support this critical initiative.
That's definitely big money that we're talking about here. The kind of money which could actually flow into the green economy, and there's tremendous potential for India. Now, Akanksha, let me come to you. Now, you briefly touched upon BRSR. So, how would the BRSR revised format bring in more standardization and genuineness in reporting? And do you think ESG reporting so far is being done adequately?
See, BRSR is expected to harmonize India's reporting landscape on ESG, which we are badly lacking, because it seeks mandatory disclosures from all listed entities on the performance against the 9 principles of the stated national guidelines on responsible business conduct. So I think this is sort of non-financial reporting, which would extremely standardize the ESG disclosures in a country like ours. Though thanks to SEBI in the last few years, the way that they have mandated business responsibility reporting on all listed entities as per the market cap has been very instrumental in creating some sort of ground to move to BRSR. But I agree that our sustainability reports of corporates currently are not adequate enough to take or provide the adequate decisions to investors to ascertain the risk on social and environmental parameters particularly. So I think this will really be a great game changer. This is what I see. We have high hopes from BRSR soon.
Definitely, and I'm sure it'll make life easier for each and everyone. But yes, definitely, this is one aspect where we need some more structuring on. Now, Deepak, let me come to you. Now, Abhay in its answer highlighted that it's investing in ESG is one way of creating alpha. Now, let me come to you and say, can investing in ESG funds lead to long-term wealth creation? Because most companies are established. If you look at the portfolio where ESG funds usually invest, they are usually blue chip companies. And how can investors evaluate ESG performance?
So 2 points here. So one is that whether the companies are able to help with the long-term value creation or not. And the second bit is how to go about selecting those companies. Sure. So I think I'll try to kind of be really very brief. I think we have tons of research, reports available, which clearly explains that the ESG as a factor has been able to build a long-term and sustainable performance. And we also have different ways of evaluating it. We could simply just compare the funds of the performance of ESG funds with their respective benchmarks. And there are we at our end, Refinitiv, we actually capture the data around large number of funds worldwide, and on a very on a very frequent basis we compare the performance of funds versus their respective benchmarks. And we see that a large section of active funds, they have been able to outperform their benchmarks, especially the ESG labeled funds. The amount of alpha that ESG labeled funds that they have been able to generate, it's much higher than compared to the conventional funds. And also, there are, I think, various empirical research available, which kind of we have, which has done a lot of back testing of individual companies, And we have clearly seen a long-term sustainable performance there. In summary, there's a lot of, I think, data, the evidence which is available through which we can establish this fact that yes, they help generating long-term alpha. Second point is how we can go about selecting such companies. So ESG as the investing as a process, it's evolving, and there are now varied ways of evaluating ESG risk. So just to kind of cite some example, now when you're actually looking at companies, there could be multiple risks. There could be a climate risk, there could be social risk, and we all know that companies who are geared for manage these risks better for in future, they are definitely going to outperform. So there are now plenty of tools and analytical platforms that are available through which one could do very in-depth ESG analysis. To cite an example, just to assess the climate risk, which is there with a business, with a corporate, there's something called physical risk analysis. So now the advanced analysis helps you sort of understand the physical risk, risk, for example, the floods or the earthquake associated with individual sites, individual locations for the businesses that you could ascertain. So basis the companies, the business operations, across the different geographies, you could then see how much physical risk they're carrying in the portfolio. Likewise, there are plenty of such, data and analytical tools that are available through which one can do a very comprehensive ESG analysis. A few more examples could be, straight away you could see how much, diverse the employee set is. Certain businesses like a banking business, wherein the human capital is very material, right? So the large section of sort of weightages are generally given to social parameters for industries like banking. So in that, you could just quickly run certain filters, see the companies which have better diversity, better representation, the female representation on board. Through various screening methods, you could actually filter out the set of companies that are aligning to your investment objectives. So it's a pretty evolving process. In some markets, it's already evolved quite a bit. People are using advanced, analytical tools, information, data to kind of run these, the process of selecting, more optimum ESG aligned companies.
Sure. In fact, a lot of big tech companies that are there in US are following the diversity, as a big theme that they're following on. So yes, as you rightly pointed out, all these aspects make sense, and somewhere down the line, global companies are truly following all those parameters to gain on the ESG matrix. Now, finally, let me come to each and every one, one of you, starting with Abhay. So, where do you see India on the ESG investing spectrum, and how would it help in bringing in sustainable development?
So look, the ecosystem for ESG is building very, very fast in India. We've got now 5 to 6 ESG funds, so funds offering ESG solutions for investors. We have a couple of homegrown ESG ratings providers, who are looking at ESG in an Indian context. So while we do have the global providers, we also have homegrown ESG providers. In addition, look at what SEBI is doing as well. How fast they have transitioned from the BRR to the BRSR, and look at the companies as well. Look at some of the progressive companies. We are looking at companies coming out with integrated reporting. The quality of annual reports is improving. As I said, a lot more needs to be done, but the awareness is increasing. And the point I want to make finally, which leads me to believe that ESG is going to be incorporated at a very fast and furious pace with all these parts of the ESG ecosystem together, is the fact that the investor is going to start, demanding ESG products. So this has happened in the West. The millennial investor actually wants to invest in ESG products, and I think the socially aware, economically aware investor in India too will want to invest in these products. Because let us not forget one thing, that that when we look out at the world over the next 5 years or so, we see a lot more physical risks, a lot more non-financial risks. Look, the pandemic is a physical risk. It's a non-financial risk, but it riled the global financial system far more than even the global financial crisis, which we had 10 years ago. So we are today seeing the possibility of many of these non-financial events occurring at a fast and furious pace. Climate change is the next one. So all of this can only be captured if you look at ESG parameters. Because if you look at conventional or unconventional fundamental factors, you're going to miss out on some of the biggest risks that companies are going to encounter. And remember one thing, the value of a company is the future value. The present value of the company is the future cash flows, and the future cash flows are going to be impacted by risks that are not being taken into consideration. If you're not doing ESG analysis and sticking to plain vanilla fundamental analysis, you're going to miss out some of the biggest risks and at the same time some of the biggest opportunities as well. So therefore, that recognition is beginning to come in India very, very fast. Between the time when we at Avendus started talking about ESG, started working on ESG, I have seen a dramatic transformation in terms of the understanding of the concept and the pace at which every part of the ecosystem wants to embrace ESG.
Interesting points there, Abhay. And let me come to you, Harsha. So what are your views on that?
More or less similar views, Kshitij. I think there is going to be a lot more of regulatory nudge. The investors are becoming very conscious of these factors and how it impacts the whole planet. And the idea is everyone wants to make money, but also wants to leave this planet in a better shape for the next generation.
In a better shape.
Similarly, the corporates are also very, very conscious these days. They are taking right steps to make sure that they are at the forefront of some of these initiatives. As far as the regulatory nudge is concerned, clearly BRSR, as many of us discussed during this panel discussion, is going to be a key milestone, which will enable a standard reporting format and a mandatory reporting format. The top 1,000 listed companies would be part of this from financial year 23. So once the data becomes standardized and across industries, across companies, I think there will be competition among corporates to really score well on that. And investors will also use that to nudge the companies. And then the kind of money flow that you will see in the ESG funds as you go ahead will also be one of the key factors to make sure that slowly and steadily the investors or the portfolio managers will start to nudge corporates to behave in the most responsible manner towards environment, society, as well as on the governance factors. We have already seen many funds getting launched on the ESG platform in India. And even in the small time period that we have seen, for example, between December of 2020 and June of 2021, we have seen about a 30% increase in the asset base for ESG focused funds. And I'm talking about only India domestic mutual fund scenario. But we also need to remember that there is a vast pool of money from foreign institutional investors, which is already coming into India, which is following ESG principles. So there is already enough and more in terms of nudge that investors are making to make sure that corporates do the right things. And the corporates also, if you see most of the corporate presentations or the annual reports, the amount of disclosure that's coming on the ESG initiatives has definitely increased. And there is a conscious effort from every side. I would only say that over the next 3-5 years, you will certainly see a lot more changes on the overall ESG landscape in India as well.
Absolutely. Now, Akanksha, where do you see India on the ESG investing spectrum?
I feel, climate risk, along with other socioeconomic risk, I think globally have been acknowledged, not just by the investors community, but also by the larger group of stakeholders. Particularly in context of India, which harbors many of world's most polluted cities. I think the risks are even more because, because of various other socioeconomic threats that it puts to the businesses operating around. So I think, in the last few years also, if you see, the trends suggest that, 85% of retail investors have expressed more interest on ESG and sustainable investing. Our Nifty 100 ESG index has outperformed both Nifty 50 and Nifty 100 peers in last 1 year. So I think all these are evidence-based trends that suggest us that the community is getting more conscious, more aware on ESG compliances. Also, I see a lot of innovations happening both in the capital and the product space. So, for example, impact investing is getting a lot of momentum. I'm also seeing many public institutions like, some municipal commissions, and they have incorporated great social bonds, ESG bonds. So I think these are very upward moving trends and suggest that, the momentum is accelerating at a much faster race in India.
Right. And Deepak, your views on that?
Yeah. Per my understanding, I think clearly a lot of work is required in India to move towards evolved ESG and sustainability practices. On the corporate disclosure side, SEBI's initiative of BRSR is definitely a good start. It provides a good baseline framework for corporate ESG disclosure. In addition to BRSR, I think we also need to have a framework through which we can understand the corporate's impact on the green economy. For example, understanding the impact of an auto company on green economy through their electric vehicle business.
Right. Okay.
So broadly understanding what percentage of their business is aligned to electric vehicles and accordingly quantifying their impact.
Mm-hmm.
So we also need to have, and this is something on the lines of EU taxonomy. So that's also kind of, focused on the same, area. In addition to that, we also need to have specialized disclosure and risk management framework for the financial services industry. This is more on the TCFD side. We need to ensure that the industry clearly identify the climate risk they carry in their portfolio or the loan book, and they help channelizing the capital to the investments which are actually targeted to low carbon economy. Akanksha mentioned about the ESG and the green bonds. Definitely that issuances need to pick up here in our country. Our peers like China, Euro region, they have raised significant money through this channel this year itself. For example, China alone, they raised around 25 billion this year so far through green bonds. And if you look at our issuances, it has been somewhere less than $1 billion USD so far. So I think a lot of money needs to be raised through this channel and then channelized towards low carbon economy. We also need to launch carbon exchange to bring in more transparency and tracking around emissions. We've seen Europe has set up a gold standard around that, and recently China, Australia, Singapore, they're all moving towards the same direction. They have recently launched their carbon exchanges. Okay. So in summary, I think the sustainability and ESG investing is becoming mainstream. Each and every investment and the financing decision going forward is going to be evaluated with the sustainability lens in due course. And we as a country, I think, should make continuous efforts towards building a world-class ecosystem for this important building block of the economy.
If I may, with your permission, just come in.
Sure. Please.
Deepak raised some very, very interesting points. Now, in addition to many of the things that he laid out, I think one of the things that I want to mention India will need to do is India will have to come out with its own taxonomy.
Absolutely.
And this is very, very vital because there is, in the next 5 years, there is going to be a massive amount of green finance, which is going to be flowing through the world. And to really get those flows in terms of green finance, you will need a taxonomy, because what a taxonomy does is it specifies what is green and what is not. And we already have the European taxonomy. We can probably come out with something in an Indian context. And given how much, and this was discussed, during our discussion, that there is going to be some huge opportunities in renewable energy, in decarbonization initiatives, and all of that, can get concessional finance from the global multilateral associations. But to be able to do that, we will need to come out with a taxonomy. I don't think we should delay because every day of delay over here is missing out on this concessional green finance.
Interesting points, which most our speakers have laid out. And on that note, I would like to thank Abhay, Harsha, Tanksha, and Deepak for their time on ESG investing. So one thing is to say that ESG investing is here to stay. Yes, we are in the nascent stage, but definitely there's a lot of work that needs to be done, and there's a lot of money which could actually flow into the green economy. Well, thank you so much for your time, everyone.
Thank you.
Thank you.
Thank you so much.